Welcome to Earl Stewart on Cars with Earl and Nancy Stewart. Reach them with your questions at 877-960-9960.
Let's say you're a Ford dealer and you're going to sell a vehicle for $30,000. So will he make more money if he finances it for 84 months compared to 60?
Yes, Randy. He makes more money if he finances it, period, because the average car dealer makes more money on the finance of a vehicle than he does on the selling margin. If he makes $2,000 on the markup on the car, he'll make $3,000 or $4,000 on the financing. The finance department is the most profitable department in the dealership in terms of return on investment, because they've only got a small investment in a computer and 4 or 5 finance managers, and they sell you the add-on product like warranties and maintenance contracts and gap insurance. But their big profit is on the interest spread between what they pay the bank for the money and what they charge you for the money. A lot of people think that I'm going to tell them I'm a cash buyer because I really get a good deal. When they find out you're a cash buyer, they realize they've lost a big chunk of their profit. When you're buying a car, you should always let the dealer assume you're going to finance with them. But you need to do your homework, check with your bank, your credit union, and only finance with a dealer if he can meet the interest rate and the terms with the bank or credit union that you pre-checked with.
If Ford Credit doesn't give the dealer a great enough incentive, he's going to send that deal to a competing bank that will give him more money in the long term.
Exactly. What the average dealer does is they'll have a group of banks, 3, 4, maybe a half a dozen, and they what they call shotgun. You come in and you fill out a credit application, and they have a objective. They want to make $4,000 on the interest profit. They call it finance reserve. And so they will shotgun it to, say, 3, 4, 5, maybe 6 different banks, including Ford Motor Credit. And the bank that comes back with the acceptance for the highest profit for the dealer is the contract they take. And it isn't always the best deal for you either, because oftentimes they'll have a answer from a bank that raises your payments a little bit, but the increase in profit is so great to the dealer that they'll really want to talk you into the other deal. They won't tell you about the options. They'll just tell you about the option that will make them the most profit that they think they can sell you on. It's a very, very sophisticated business. They have what they call reserve agreements with these banks, and they also have special banks that will only finance bad credit people. So it's a very sophisticated business. It's a separate profit department in every dealership, and it's the most profitable department in the dealership.